Welcome to Markets Now. I'm Michelle Rook along with Jeff Hogendorn with Professional Ag Marketing. Well, we have lower grain and livestock futures trade today. And in fact, we've accelerated, Jeff, a little bit of this pressure here in the soybean market anyways. Risk off day in the outside markets has spilled over. That's part of it. But soybeans, we also had pretty poor exports this morning, didn't we?
Yeah, I think those are really starting to get people's attention. We're missing the daily sales here the past, probably going on 2 weeks, I suppose. I know we've got, I think, two of them this week, one or two of them this week. You probably know that off the top of your head. We did get some corn this morning on the dailies, but the weekly report came in pretty crummy. 16 million bushels on soybeans. That is not very much for the time of year then we're supposed to really be getting some sales on the books. And what we're hearing out of South America is they're getting the business. So it's a little hard for me to swallow when I stare at the balance sheet. In my mind, still very tight in the U.S. I would even argue that, especially if you take the yield down anymore, that we don't need as much export sales, but the global situation definitely looks different than the U.S., and that's what we're focused on, at least here for the moment. And then certainly some outside market influence in our markets, more so than maybe I gave it credit for earlier in the week, at least, Michelle.
Yeah, no doubt. And the dollar's higher as a result of kind of what the Fed said yesterday. They left rates unchanged, but kind of hinted that there's maybe more hikes coming in the future. So the dollar's up. That's kind of spilling into both grain and livestock futures today, though, isn't it?
Yeah, I think big time. I think we've got to start paying a little bit more attention to that outside influence here. I think it was able to push some of the livestock around earlier this week, but then you get a day like today and just everything's red across the board. That smells awful strongly about some big money that just wants to exit for the day.
You bet. So let's talk about grains. Corn and soybeans. Also, the fact that we're getting the harvest started here. We're hearing varied yield reports, but just some harvest pressure, obviously. But today we are seeing some technical selling pressure in the soybeans, and we've taken out some pretty key support again here, haven't we?
Yeah, I think so. And you're going to get some support here again, probably another 10 cents down, or 12, 13 cents lower than this. We put an old low in there, so we'll have to see if that can kind of hold us. I sure think it would, but this gets into these markets where, hey, when money flow wants to go one direction or the other, that's the only thing that matters for a bit. So when I look at 1282 November soybeans, I'm thinking, man, those sure are getting to be looking a little cheap to me. But certainly anything can happen for a while. And you know, I I think you mentioned it too the other day, but harvest pressure. I'm still a believer in harvest pressure too. I know the world's changed a lot in the last decade or so, right? But especially on these soybeans, I think you're going to continue to see some sell pressure coming off the combines here. Maybe that pushes us down to levels I don't think we ought to be at, but I think we'll get some pretty strong support down in that 12.80 mark, a good 13, 14 cents lower than this.
What about corn technically? We went up and kind of closed up into resistance yesterday. So today we're setting back. Where do we find support there?
Last week, going into the report and through the report, I was watching those bottoms, in that 1270, or excuse me, 474 type area. We've able to sneakily take those out here late last week. And now you can kind of draw a trend line down through some lows back to like May and July and again in August here. And I've been focusing on that this week. It's been hitting that pretty well and support and been well supported there. So that trend line is going to come in at 466 here today. I think that's really solid. Corn lows from a seasonal perspective, they really either come in the end of August, beginning of September, or all the way out into November. It's a little hard for me, even though the balance sheet is very sloppy. I'd be the first one to admit that. It's a little hard for me to imagine that we'll just keep grinding lower into November off what I think is, fairly old news, which is that the balance sheet situation, of 2.1, 2.2 billion bushel ending stocks. So I think this downtrend line is going to hold for now. We're going to kind of bounce in this, off the mid 460s. I wouldn't be surprised to see us trade back down there again. From there, I would think we could work back higher again.
Yeah, and you got to believe where we're seeing harvest pressure, where farmers might be selling off the combine because those prices are decent. Corn, we're at levels that are below insurance. Producers, they're not going to sell. Are they going to store for a while? So once we get, some of that crop in the bin, is that where we put our harvest low in, you think? Or do we get it before that, or when?
Well, that's where I think you can probably be pretty well supported here. I 100% agree that there's not going to be a lot of farmer selling here unless you get into some areas where, the yield is quite a bit better than what they'd kind of gotten
Sure.
accustomed to thinking here, whatever that expectation was coming into harvest. There's going to be some situations where it comes in better than expected and they kind of either run out of room or just say, well, we'll move this extra bushels down the road. And then from the end user perspective, those ethanol margins are outrageous. They had to slow things down here in the last couple weeks, doing some maintenance and whatnot, and some old crop versus new crop corn availability. But those are through the roof, and I really think there's going to be quite a few more people that want to buy it down at these prices than want to sell it here, Michelle. So I'm looking for some strength from that standpoint as well.
And despite the fact that feed prices are down here today, the livestock are also down, and we have established that's a lot of this risk off and money flow. Cattle, we also have a cattle on feed report, though, coming up, and certainly that looks like it should be fairly bullish overall, right?
Yeah, I think that looks like that'll be pretty supportive here. Again, kind of the same storyline as from the supply standpoint. Cash, I think, largely still has to be traded this week, so it's going to be interesting. Yesterday, I was feeling pretty confident that we could do a little bit better this week. And it's going to be a little bit tough in the face of, and now it's creeping on $1.50 lower front end futures here. It's going to be harder and harder to keep asking for more money today. We'll see if the feedlots can pull through and remain resilient. I do look at the setup on this cattle market, and I do get concerned. We got to look at the southern bid if you want to consider, where the October futures are going to start settling against here. What is that, 2.5 weeks from now? So it's not too far away. And then, so you're trading, a good $4 premium to where the southern cash has been so far. And then you look at all the premium structures that are out into these other futures, with Dees another $4 and change higher than that, and another 4 to 5 going out into February. So there's just a lot of premium in that market. Obviously, it's been well justified, right? We've outpaced any premium that the futures have put in here so far. But I start looking at some of these spring months even and think, man, that's a lot of optimism built in there when I really think we're going to start adding weight to these critters. And you can do quite a bit of damage on the supply side by just adding some carcass pounds.
Yeah. And Jeff, hogs down today, but yesterday we went up and tested the upper end of that trading range that we've been in on the charts. And, today would we have been up had it not been for this risk off environment? Or is this just some profit taking because we couldn't continue to push through those levels? Or, I know cutouts are down. Is that part of it?
Yeah. As impressed as I was yesterday about that move higher, and at the time I was thinking maybe there was some money flowing into that, into the hogs, because the cutout has been very resilient. I know it was down yesterday, and I think that's definitely part of what traders are looking at, thinking, okay, oh shoot, here we go for the fall slump, right? And we're going to be lower every day from here out. I'm not quite in that camp. I know that can change very quickly, especially this time of year. Personally, what we're hearing is all pretty positive things about meat movement, especially on the pork side. So I'm not horribly worried that we're going to fall out of bed on the product values, but and you have to respect their trend. I mean, running flatline here to slightly lower at a dollar cutout as you start creeping into the back half of September, that is very impressive. So I kind of think like, yesterday we pushed October right up against the index, and it's like, wow, that's basically saying we're going to have $100 cutout all through October. That seems like a stretch. But boy, they are just really hating these hogs today. And
Yeah.
I think that's overdoing it as well. I don't think we have to be quite this pessimistic, quite this fast here, Michelle.
Yeah, and then we have those discounts built into the back months. So do you think
Exactly.
there's room to come back in those here eventually?
Yeah, I think that's why that's why you were putting good money on like December yesterday,
Yeah.
and yeah, I felt like maybe they're overdoing it a little bit, but we don't have to trade, $74 and lower with an $86 index that really isn't trending any lower yet at the tail end of September here. I just don't think we have to be this low.
A little bit. Also, we have Hogs and Pigs report out next week. What are you expecting there?
I think we'll definitely be able to see some lower sow herd, and that's what really people are going to focus on. I think, for the longer term markets at least, and we're pretty optimistic that we're going to at least take 1% away from the sow herd. It's possible it'll show up with more than that. You look at the sow slaughter data, and that's going to say 1.5% pretty easily in my mind drop in versus last year. There could be less gilts going into the herd as well, so it's possible that you could see something bigger. It's going to be pretty interesting. The other side of the coin and the other side of the issue is those hogs and pigs reports struggled a bit here in the last year and a half. So we'll be a little bit careful just how much we dive in there and how much we take that for granted, if you will. So I think we'll be looking for a few less sows. I think we got to see some higher market inventory. I know that there's a couple different sides to that argument as well, but I keep going back and say just, I know we've discontinued some of these finishing spaces in the last 2 years or so, but they are chock full. There's no question about it. I think some of those pigs are coming down from Canada. I'm afraid that's going to show up too. I'm afraid you're going to look at it and say, all right, we're going to continue to kill 1.5% more hogs until we get to like January, something like that. And it's going to be more like March, April before the smaller sow herd starts to have an effect on finishing supply. So I don't think I think it'll be a little bit disappointing in the winter months. Hopefully start showing some optimism for like March, April and beyond.
Okay, thanks for joining us, Jeff Hogendorn with Professional Ag Marketing. That is Markets Now.